For Insight, let's go to our featured guest of the morning. He's Greg Taylor, Chief Investment Officer at Purpose Investments. Greg, thanks a lot for coming by.
Thank you.
What do you think of these numbers? This is, perhaps a sign of what's to come. Provisions for credit losses was the big worry heading into this quarter, and Scotia has certainly dialed them up in a big way.
Yeah, there's been a lot of concerns about the Canadian banks, and certainly you can know that when the banks are having such a bad year. I think Scotia's down 10% in the year already. The banking index is down 6% versus the TSX being up 3-4. So there's a lot of concern around the banks, and I think the last quarter they reported, there were a lot of people saying, well, wait a minute, why didn't PCLs go up? Because everyone thought the economy is slowing, we can see what's going on. Why aren't you bumping PCLs more? And when you look at the Scotia number today, the headlines are stunning for sure, and the first step to solve a problem is to admit you have one. So that's maybe a good thing, but there's going to be a lot of people questioning about whether the rest of the banks have to follow this, and those that don't, people are going to be really skeptical about their numbers.
Right, and I think what you're saying is that provisions for credit losses are a judgment call by a bank. One bank may look at the macro environment and its loan book and make different assumptions, different forecasts about the future than another bank might be. It looks like Scotia is going conservative here. The other thing that's in the near-term future for Scotia is this bank, of course, is under new leadership, and there's an investor day coming on the 13th of November, perhaps the most anticipated bank investor day in quite a long time, because the shares of Scotia have underperformed for years. They underperformed under prior leadership, and the new leader, Scott Thompson, is under pressure to turn things around.
Yeah, and that's the big caveat here, because you always were waiting for the big kitchen sink quarter and whether Scotia would actually come out and write down everything and give Scott Thompson a fresh sheet of paper to deal with. So maybe that's the biggest thing going on here, but I think you can't really say that the economy is doing great. So I think across the board in the next few days, everyone's going to be looking at these numbers and seeing what PCLs do and being, again, very skeptical of those that don't bump them to maybe not to this magnitude, but higher.
The bank shares have uncharacteristically disappointed and not delivered for investors for a good couple of years now. What's your thought of these shares as investments as we head into 2024?
Well, Scotia's a weird one. Going back 15 years ago, the joke on the street was always BNS stood for the bank of no surprises. And I think that's kind of started to wane over the last few years. It's been one of the underperforming stocks. The biggest thing holding in right now is the dividend yield, because the dividend's back over 7%. And that's pretty attractive, but except when you look at it versus money market and other risk-free instruments that are in the 5+ range. So banks usually can be held in by their dividends, but you got to show some growth too. So I think everyone's going to be waiting for the 13th to see what Scotia can put up for growth.
We will have Rob Wessel with us in about 20 minutes' time. Rob Wessel's a former Bay Street analyst. He's now with Hamilton ETFs, an ETF provider that specializes in Canadian bank ETFs. He'll take us through his views, his expert views on these numbers as well. In the meantime, we've got some breaking news on another important Canadian story. There's news on the First Quantum story in Panama. We are seeing that the Supreme Court of Panama has ruled that the government's deal with First Quantum on its Cobre Panama mine is unconstitutional. And Greg Harris, you're hearing this for the first time, but you followed this story very closely. We spoke about it a bit before we went to air here. What are your thoughts here? Greg Taylor, I'm sorry, Greg Taylor. What are your thoughts here on this? This looks like another very bit of bad news for First Quantum Minerals.
Yeah, it's going to be interesting to see how they get out of this, because Cobre Panama was the biggest mine in First Quantum. It's also very relevant to Franco-Nevada, as it's 20% of their assets and their revenue stream. And this has affected both those companies, and it's really churned how people perceive Panama as a country, whether you can invest in them. So this has really gone sideways in the last 2 months, and now it's going to go through mediation. They'll have to go through world courts and try and get something out of this, because it does look like they've gone outside of some international jurisdictions, and we'll see how this ends up.
What does this say to investors in mining companies and political risk?
Well, I think that's the one big thing with mining companies, and why you can be optimistic on them going forward, is that it's just hard to get mines built these days. And there's not a lot of places that want mines and a lot of ones that want to build them. So there is demand still increasing, and there's not a lot of supply coming on. And Cobre Panama was going to be about 2% of world copper supplies, so that's coming off the world's market now. So look for the copper price to move higher here, and then the odds of more copper mines being built is going to be smaller.